This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, September 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn down a penny at 4.24 3/4. November soybeans are down a quarter at 10.12. And December Chicago wheat was down 4 1/4 at 5.22 3/4. This morning, we got a PCE report, was up 0.3% for the month, which kept the inflation numbers at 2.7%, which was largely in line with expectations there. No export sales announcements here this morning, so we'll jump right in. What we know here as we start the day, should see some real good progress as far as harvest is concerned. Weather looks really good across the majority of the belt. We've got October grain options are going to be expiring here today, so please get with your consultant there to discuss any changes in your plan. So with that, Dustin, maybe kick us off with a few thoughts here as we start the morning, and then we'll throw around the room.
Yeah, very quiet overnight, Dan. I think, the biggest thing that my focus is going to be is insurance replacement. Let's just assume, with this higher subsidy we had this year for ECO insurance, the price is set very good for corn, $4.70 compared to current prices. So if you're in a county that is, it has enough variation on yield where the county yield is average, then that would mean that policy starts paying at $4.46 a bushel and below on these. And this is whatever that October average is what I'm talking about. So today, 4.24 3/4, that's, we're 20 cents in the money for anyone that has an ECO policy that, is expecting average yields. Now, if you're well above average yields, right, if you're 10% above normal in the county, then that's going to lower that payment trigger and you won't be in a payment. But there's a lot of variation out there, a lot of disease pressure. So just talking to clients, I think there's some people, especially we're pretty comfortable that they're likely in a payment. And so we're using that as part of their, marketing plan. So how do you change that? As you go into next month, that price starts to establish itself, and that changes the dynamic of how we lean on insurance. Because if you start off the first half of the month at today's price at 4.25, and the second half of the month, something bearish comes out and we go take out the contract low, we're not going to be getting the same payment that we would have otherwise been projecting if that policy was not already averaging through the month of October. So we have to think about what kind of a hedge are we replacing it with? What does your delivery schedule look like? All of those things are going to go into that. But just want to kind of keep that in mind because they're going to change pretty quickly for the hedging crowd that's been leaning on crop insurance over the next couple of weeks.
Very good. Justin, a couple thoughts here as we wrap the week.
Yeah, no, I agree with Dustin. That's really our main focus right now. And yeah, not to sound like it's hard to, not sound like a broken record, especially this time of year, but that really is what it's about because we don't know the national yield. We're getting more and more data. It's still hard, no matter how many, individual yield reports you get, it's really hard to figure out the national yield. So, I think the consensus is that it's, most likely lower than the government number, but like we've talked about on the show plenty of times, there's a lot of acres, there's a lot of different things at play here. So I kind of look at it as like it was a really good rally into harvest. Obviously we can go higher, but the risk is that we go lower, obviously for people that are growing the crop. So just kind of focusing on balance and even looking at 26 now with some of these products like we talked about on the show this week, just always kind of looking at what's the best use of dollars in this situation with so many unknowns. And I think that's the best you can do. One of the other things we talked about was, if we do have a government shutdown, which is looking more and more likely, the chance of not having an October report is probably pretty high. So, that's another thing that we might not get new fundamental information for a while outside of the stocks report next week. So I still think the stocks report could be interesting. We've had a lot of those reports where there's a 300 million bushel surprise or miss by the average guess. And I think this one's going to be especially unique because, we're forecasting such a tight carryout for last year's crop, and spreads, really didn't reflect that. Spreads kind of went close to full carry, kind of sluggish, end to it. So I'd be curious to see what that number is. I do think there's a chance that we see a high stocks number for corn. But again, that's just kind of based on how the market felt, going into the end of the year. So.
No, it's good stuff. And you you reference all the tools and all the different products. And I just wanted to point out that next week we will have sales closing on some of these MP and MCO products that we've been talking about on the show quite a bit. I know we've put out a special video there to AgYield clients and whatnot. So get in touch with your consultant. I think there's some good things to look at there. See if it fits in with your operation. Especially it's a busy time of year, but take 20 minutes to visit with the guys and we can talk through it and see if it fits at all. Ben, what do you got from the East here for us this morning?
Early bean yields, not bad. We're going to get into later beans. Little concern there. Double crop beans are not good at all from what I'm gathering. Early corn yield results, below the last 2 years for most people. Not catastrophic, but far from records. So it's very early. The general idea that I get from everyone is that early planted stuff is pretty good, and they expect it to get worse as they get into the later planted stuff. Because if you recall, we had a pretty big gap there from our early planted crops to our later planted crops. So processors still trying to fill short-term needs because they have not seen full bore harvest in corn yet. So ethanol's been pretty strong, but I would think that early next week that probably falls by the wayside.
What's your take on the market?
I think that next, the stocks report is a big deal. I hate to see a gut punch there. I think that the USDA somehow has got to reconcile, at least in my mind, how things acted this year, considering the tight carryouts we had on paper. They could completely save face by leaving stocks alone and then eventually not lowering yields and kind of sweep it under the rug and make everything tidy. I think it seems to be a little bit more of a bearish sentiment, even though the numbers would be the same in the end because people get so focused on yield. Corn end user is obviously short, didn't get the coverage. I think things kind of turned a little quickly on them. We've always talked about the turns being difficult. You can see the buyers here on breaks. Beans, it doesn't feel, with the news that we had back-to-back days, you could easily make a case that beans are trading, high nines, 980, back to where those kind of lows were before, and they haven't done that. So I don't think there's a big conviction from managed money to want to sell beans because it could be a 20 cent, 30 cent gain over a few weeks, or it could be 50 to 80 cent loss in an overnight from these types of prices should we strike a trade deal. So I think that there's not a massive conviction from managed money to push these markets in either direction. And right now, you typically see a big influx of supply. The this would be a time where they might think about doing that. But there's end users here to buy it on the break. You can see it every time it looks like it's going to roll over. There's buyers. So I think probably, sideways range 15 to 35 for a while. Uninspired trade.
Justin, you referenced the government shutdown, and just for, I guess some of the listeners, and does that generally lead to just choppy, uncertainty, low volume type of trade is what we've seen in the past, or what's your take?
Yeah, I don't, I don't know that it changes much from what you think. The last two reports we kind of brushed to the side right away and faded, right?
Mm-hmm.
We found a bunch more corn acres, lost bean acres, giant yields. Market kind of shrugged it off and kind of trading what it thinks anyway. So I don't know that changes much. I mean, just from it's just nice to have, objective yield data from the USDA, versus satellite imagery, surveys, those kinds of things. So, the October report, you get decent objective yield data. So I always look forward to the October and November reports, just because it kind of puts us, in a tighter range of what thoughts are.
Mm-hmm.
So that's the unfortunate part. I mean, I don't know that the market, I think we're going to, we'll be trading the yields that we're hearing, harvest pressure, market makeup, crop insurance expiring. I think all those are big things that happen in the month of October. Anyway, so I think the biggest fundamental driver is going to be crop insurance expiring, and then how the change of ownership happens, the month of October and November, between farmers having to, make some sales or free up cash, how that all plays out. And end users have been hand to mouth, but I think they've been covering on this rally, to Ben's point. So just to see how that all plays out here.
Very good. Quickly here, we'll move over to the livestock markets. So Ryland, box beef continues to be weak, and it's keeping cattle pretty volatile there. But I guess the biggest news here this morning was the miss on the hog and pig report. So maybe your take on what you looked at and saw yesterday there.
Yeah, absolutely. So cash lower, beef lower, futures lower, down to support levels. So it just seems like you've got a lot of negative news and just a lot of negative sentiment coming into the day. Cash trade was 234 to 237, so it's down about steady to about 3 lower. And then some reports at 232 even, and in the north 365 in Nebraska and Iowa, so that's about $6 lower. So it just feels like, obviously we're thinking that the seasonal top is in for right now, and now where do we go? We're right back to that 40-day moving average, and we know the managed money is heavily long this market. So I think we've got a lot of bearish news to kind of digest just going into the weekend. So what happens now, hard to say, but it does kind of feel like there's a bit of a weaker tone coming into the day. So we'll see if the actual price can withstand some of this kind of sentiment. And then on the hog side of things, hog and pig report was definitely on the friendly side. I mean, I think just where the areas where we were expecting little increases just in all hogs and pigs and market hogs did not get that at all. In fact, we were down quite a bit. So instead of showing any real expansion, I think the market expected something close to that, but we're still seeing smaller inventories and contraction. So, I mean, all hogs and pigs came out at 99%, breeding inventory at 98, and market hogs at 99. So like I said, we were expecting just a slight uptick in all hogs, pigs, and market inventory, and we just did not get it. So we've got some pretty tight supply situation to deal with, especially just looking at some of the farrowing intentions, and as well as the sow herd just being at a 10-year low. So I think overall this really sets up kind of a higher for longer kind of price structure, and I would expect futures to open quite a bit higher this morning just on account of these tighter supplies.
Hey, Ryland, I had a question. So, there's talk about, trying to expand the herd size, specifically cattle.
Right.
And then I saw some comments from the administration that it's not to include payments directly to producers, but maybe more opening, CRP ground, or what's the current thought process there on how they're going about it?
Right. Well, I mean, it's still, I mean, obviously there's a big, kind of commentary period in these things, and just looking at social media, talking to clients of ours, the general consensus was the cattle industry does not want any kind of bailout. They're not looking for any governmental support. I think realistically, all the cattle market has ever really wanted was just kind of, good old fashioned, let the market figure it out kind of price action, and so now that we're at these record high prices, I think people are taking on quite a bit of risk, with feeder prices where they are, and having to hold these animals for multiple years, in some cases. I mean, they don't want any kind of governmental intervention that could threaten the price structure on a longer term timeline. So if there is that incentive, I mean, this is why prices are as high as they are, right? Is that we are in the cycle at the tail end of liquidation, and we're trying to incentivize expansion through market pricing. Obviously the Packers kind of been taking it on the chin, losing money making beef, but I mean, at this stage in the game, the ball's in the producer's court. It's a seller's market. We're starting to see profitability come back in a big way, and honestly, the cattle industry does not want anybody interrupting that right now. So what's the right decision? I would imagine something that kind of allows maybe a higher degree of certainty with some kind of risk protection, whether it be through an insurance program. They did talk about opening up CRP acres, or just expanding some of the restricted areas for grazing. So, I mean, maybe we see something along those lines, but I think it probably comes in some way, shape, or form, and some kind of insurance incentive to do something like that. But really, there's nothing concrete at this point that we've seen that they are going to do for certain. There's just been a lot of back and forth on social media as to what they're thinking.
Well, it's hard because obviously, like with the screwworm situation, I assume that they're building up these facilities and these operations in Mexico. A lot of these corn sales that we're seeing to Mexico are, they're feeding the cattle that should be here being fed. So
right.
Some of the demand that we're seeing on the export market, is in lieu of feed demand here in the U.S.
Right. And
right.
I think,
So,
yeah. And I mean, we're just at that point, right, with the border being closed and the screwworm threat that's obvious, and making its way further north. You would think that we would start to really ramp beef imports up, but obviously there's a lot of pushback from the industry and in that as well. And right now we've got the tariffs on Brazil. So, we've kind of done everything we can to get the price where it is and to kind of slow things down on the cattle side, I think, from a governmental intervention standpoint. So, I mean, I think everybody's kind of getting what they want. It feels like it's a bit of a free market. You're insulating our producers a little bit from some competition. But yeah, I mean, like there's obviously going to be a buildup and a backlog in Mexico, and I don't think they have the slaughter capacity to really handle the volume. So they're going to have to figure this out, I think, in the interim. And nobody really knows exactly the impacts of this, if it's going to last years, if it's going to last months, weeks. I mean, we've heard some comments from the Mexican president that there was potential for that there was a plan to open up the border in November, and that got the market really shaky because we haven't had any corroboration from the USDA or Ag Secretary Rollins about any of that. There hasn't been any plan revealed in that regard. So it would seem kind of interesting if they actually would open the border while the screwworm situation is moving further and further north. So still a lot more questions than answers at this point is exactly what we're doing. But the bottom line is we got a record high price, or just off record high prices now. And the producers are loving this. This is what the cattle market needs. And sadly, it only lasts a certain amount of time before we have the price incentive to start expanding and the price structure completely changes, and the cycle starts over again.
Very good. It is Friday. We've come to an end of another great week. So now we'll go to everybody's favorite segment of the week, Fun Fact Friday. Brian, what do you got for us?
Thanks, Dan. Happy Friday, everybody. We made it. Today's fun facts are for our host with the most, Dan Dempsey, with the Ryder Cup teeing off this morning. And I thought we'd look back at some of the more funnier moments of the Ryder Cup. But how did it all begin? Began back in 1927. Samuel Ryder, a wealthy English seed merchant, was watching Team U.S. go against Team Great Britain, and he thought, wow, this would be a great idea for a tournament. So being as wealthy as he donated the Golden Cup, and now we have the Super Bowl / World Cup of golf. So let's look at some of the fun moments. Fan putt, 2016 at Hazeltine. a heckler yelled out that he could make the putt after Stenson missed it. So what happened? He was handed the putter. Cameras were rolling. Sank the putt. Crowd went crazy. Instant legend right there. So secondly, Rory versus his alarm clock. 2012 at Medina. Rory almost missed his tee time thinking that Chicago was on Eastern Standard Time. He ended up getting a police escort, sprinted to the tee box, and then actually ended up winning the match. Still to this day, fans dress up like clocks to heckle him. Justin Thomas, shotgunning a beer, 2021, Whistling Straits. After a big U.S. win, JT grabbed a beer out of the crowd, shotgunned it, slammed it down like he just won the WWE title. And I think he did it this morning to start off his round this morning too. So now he's got a little thing going for him with smashing beers. So we'll go to the Green Rush, 1999 in Brookline. Justin Leonard drained a miracle 45-foot putt. The entire U.S. team plus caddies and wives stormed the green before the match was technically over. The camera zoomed in on the English golfers with just disgust and furious looks in their eyes before they were trying to line up their last putt. And of course, they missed it. And lastly, the bagpiper fail. 2014, Glen Ingalls, Scotland. A very drunk fan brought bad bagpipes into the crowd, played horribly off key, was escorted out, and the fans in the gallery gave them a standing ovation. It cheered them all on. So hopefully we'll have another instant classic this weekend. I'm sure the beer snakes will be at full mass. And I was going to do a Friday fun fact since it is Ryland's birthday today on all the crazy quirky things Ryland would do, but we would go all the way into the we on that.
Yeah, I don't know if we got time.
Happy birthday, Ryan.
Happy birthday, Ryan.
Thanks, boys.
Yeah, and we are struggling in the Ryder Cup so far. We're down in 3 matches, so we need to pick it up here, boys. Anyway, thanks for that, Bri. We just opened the markets here. We'll get a quick readout. December corn down 2.5, 423.25. November beans are up a half now at 1012.5 is the last. And December Chicago wheat's down 6 at 521. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.